Hi, welcome back. We will continue on the final video on the topic of financial analysis. In the previous videos, we already looked into the topic on balance sheet, projected balance sheet, and income statement. So this last video, we will look into the cash flow statement. The cash flow statement is a financial statement that reports an organization's inflows as well as outflows of cash. So it is an important statement as an organization needs to have sufficient cash. So you have to make sure that you have enough cash in hand to pay expenses and purchase of assets. While an income statement tells the organization whether it has made profits, a cash flow statement informs whether the organization generated cash. A cash flow statement shows changes over time rather than absolute dollar amounts at a point in time and uses and reorders the information from an organization's balance sheet and income statement. The bottom line of the cash flow statement shows the net increase or decrease in cash for the specific period. Generally, cash flow statements are divided into three main sections. Each section reviews the cash flow from one of the three types of activities. So these activities are listed below. We have the operating activities, investing activities, and financing activities. With regard to the operating activities, this section analyzes the organization's cash flow from the net income or losses. For most organizations, this section of the cash flow statements reconciles the net income as shown on the income statement to the actual cash the organization received from or used in its operating activities. To do this, the organization adjusts the net income for any non-cash items, such as adding back depreciation expenses. Remember, the depreciation expenses may occur at certain period of time and may not, and adjust for any cash that was used or provided by other operating assets and liabilities. In short, this section on operating activities is where the items reported on the income statement are converted from the accumulating basis of accounting to cash. The second element is the investing activities. So this section shows the cash flow from all investing activities, which generally include purchases or sales of long-term assets, such as property, plant, and equipment, as well as investment securities. If the organization buys a piece of machinery, the cash flow statement will reflect this activity as a cash outflow from investing activities because cash is used for this activity. So if the organization decides to sell off some investments from an investment portfolio, the proceeds from the sales will appear as a cash inflow from investing activities since cash is received from such activity. Put simply, this section reports the purchase and sale of long-term investments and property, plant, and equipment. The third item for cash flow statement is financing activities. So this section shows the cash flow from all financing activities. Typical sources of cash flow include cash raised by selling stocks and bonds or borrowing from banks. Likewise, paying back a bank loan would show up as a use of cash flow. Whenever the company pay back to the banks, the cash will be stated in these financing activities. This section essentially reports the issuance and repurchase of the company's own bonds and stock and payment of dividends. So this is an example of the cash flow statement for a typical month ended January 31st, 2002 for a company. So we can see here the values of the operating activities, cash flow collected from customer, cash paid for rent, cash paid to employees, cash paid for utilities, cash flow from operating activities. So this is the first part on the operating activities. The second item, the investing activities, include purchase of equipment, purchase of securities, sales of securities, cash flow from investing activities. And finally, the last part of the cash flow statement will include financing activities that involve issuance of stock, increase of notes payable, repurchase of treasury stock, cash flow from financing activities. So the total cash flow is being denoted here as $203,400. So the ending cash for this particular month is $203,400. This shows how much money that the company have in cash. In summary, in terms of the financial statements, we have already looked in the beginning on the balance sheet that involve both the current balance sheet and the projected balance sheet. We also already looked at the income statement. And finally, we look at the cash flow statement. So that's all for the topic on financial statements. It's actually give you an overview or a glance of the aspect of the financial statements. With that, thank you very much. Hope to see you in the next video on a different topic. If you have any comments or query, you may leave it at the YouTube link. Thank you very much. Assalamualaikum warahmatullahi taala wabarakatuh.